Hi, Morgan Lekstrom here, CEO of NexMetals Mining Corp, focused on two past producing assets in Botswana that are in the copper-nickel-cobalt space and in the copper, nickel, and palladium and platinum space. These two past producing assets were very large in size when they were producing, stopped producing in 2016. We were able to get them for pretty much a song, and not only expand them, but solve some of the really critical problems that these assets had, not only from a metallurgy side, but on the drilling side.
Good to have you here. Thanks. Enjoying London? Enjoying the weather?
Love the weather.
It's so cold.
It's like Canada.
This is true. This is true. I'll stop. I bet we're British, so we have to complain about everything. Look, you heard the one-to-one conference going well. Who are you here to meet?
Yeah, going great. Yeah, meet people.
With money.
Yeah.
Oh, I get it.
With
Makes sense.
money. Yeah.
Makes total sense.
It's an investor conference.
Look, you obviously made an announcement about quite a big raise. Maybe slightly surprised some of your retail shareholders, but why did you do it? Why that quantum? Why now?
Yeah, so there's fundamental things that you do when you're looking at raising money and the company side of things. And I kind of want to step back into when we got involved in this company, of what was going on. So I like, a good reminder of that in March when I got involved and our team got involved, there was $21 million of debt on the book, on the equity stack. There was a payment coming up of 35 million Canadian or 25 US coming up in January to March. And so we first cleared out the debt, converted all that to equity with EdgePoint, our largest shareholder, did a lot of work, and got to a point where we're sitting there going, are we going to convert this to project level equity? Are we going to convert this into another debt facility? And I'm a big believer that if you have debt too early in a company, you absolutely crush it.
Yeah.
So there was a number of funds that came along that said, hey, we understand that you need to pay this $35 million payment. We know it's March or April, and the government in Botswana has really been struggling financially from De Beers, the decline of diamonds. So we said, hey, this is something that the market and some good funds are open to. Some really long fundamental funds came in and said, let's finance this. We see the growth path. And I was, price is never right, always, right? It's never the right price for anything. But we were able to raise a significant amount of money, take that debt out, deleverage the company completely. So now we have no debt. We have, as of, we'll pay that payment here shortly. As of December, we will have no payment due to the government, which means we've secured the asset. It's been one of the fundamental underlying value deprivers of the company, as we've hit everything we said we were going to do.
Yeah.
But every time we do, the stock pulls back because the market knew we had to do it. So we took that, called the medicine right now, the final cleanup stage, and now we can advance the assets. So we're well capitalized to do that.
Talk to me about the team, because obviously what you've taken on is something with a lot of hair. Okay, with smelter issues, met issues, debt on the books to the government, right?
It was both to private equity and government originally.
Okay. So you kind of gone debt to equity for that. This upcoming payment is now out of the way. Could you not kind of refinance those in different sorts of ways, spread the load, as it were? Why go early and take it all out?
Yeah, so I mean, during the process of acquiring the asset before I was involved or anything like that, they had set a payment schedule. And we'd already prolonged that payment by a year.
Who were they? Who did you
the past management during the past.
And it wasn't working for them. Why?
Raising equity was tough.
That was right.
Yeah, so they had taken on debt too early. And again, it was a function
structure,
of
basically. The
structure of the company was the issue. They did an unbelievable job getting the resource, showing scale, putting the right borehole EM in place and the right team in place. But it was just the capital market structure really wasn't in the right place to advance the asset.
So timing, structure, and cost of capital, but
always
going to kill you. It's different times. You have gone out there and you have attracted the capital. Like I say, picture was 80 million something or other.
It was 80 million on the dot.
On the dot. Okay. Where's that come from? Who?
So we brought in a new 9.9% shareholder called Condire out of Texas.
Yeah.
A long fundamental fund. They've taken very big swings with companies like New Gold, ODEV. Right. They do a lot of work. They come in, again, they're very fundamental. They don't seem to make a lot of investments, but when they do, they're in.
Okay.
And bring them in for 9.9% of the company was really a testament to the asset, to the team. Obviously, the price they're getting in at was a positive for them.
Yeah.
But that attracted a lot of more fundamental people. Our own shareholder, EdgePoint, wrote a $9 million check in, so they re-upped.
Yeah.
So we had We had 97% of our book was long-only institutions.
Okay, so you're kind of rotating the register out. So there's still a ton of retail in there. So for those guys and gals, can you, and maybe also to you people looking at this as well, can you just explain what you're hoping to do? Okay, you bought something cheap because it was a bit of a mess, right? You feel you've got a solution to all of those individual variables, which of course previous management problems. Who on the team's doing what in terms of addressing those specific issues, and what's the big idea at the end of this once if it works out?
Yeah, it's a really good question. I would say that Sean and I, so Sean's the president of the company, Sean Whiteford, unbelievable geo leader, great background stemming from BHP, Rio Tinto, Cleveland Cliffs. Like he's done this over and over.
Right.
So we split that role really well. So anything to do with the financial side, anything to do with how the company's going to go forward in that sense, I do, and Sean is involved. Our board's heavily involved. And then with Sean, him and I run the technical together, but he really focuses on it.
Right.
So you asked, what are all the things that we've done? Well, first thing we wanted to solve was that debt piece. We solved that in March. Second thing, we're saying, okay, well, we know there was a smelter here before. We don't want to have to build a $1 billion plus smelter because that kills projects from a risk and capital side. And that's been an overhang in the market for a long time. Let's solve that. So we went out, we raised the money, we solved that metallurgy issue. So now we can split the concentrates.
Right.
That was, I still don't think the market's quite understood how big that was for the company.
Explain.
You've taken a project that required a $1 billion+ smelter to be built to run it, to not require that anymore. So you've deleted a huge amount of CapEx and OpEx potentially out of the project.
Who owns that smelter now?
It's been taken down. It was an Indian company that bought it.
Right.
Wouldn't have wanted it.
Okay.
It was very old.
It's completely gone.
Yeah, it's all been
Decommissioned,
dismantled.
Dismantled. Wow.
Yeah,
okay.
exactly. That smelter was a bulk concentrate. It had decent recoveries, but being able to split the concentrates the way we did, we can now optimize the resource in the ore body. So now we don't need to. I think the project always said everyone wants it to scale. Hit the hinge zone and all these zones we're talking about, make it huge, then you have enough time and scale to build a smelter. Well, let's get rid of that because that's the root cause of why you need to scale it, and let's actually make it something much larger.
Okay. So we're kind of going to rip through this, and then I'll kind of come back and get into a bit of detail. Okay. So you got two former producing assets. Correct. That's right. Yep. Can you talk about tonnages and grades, and obviously the mix between what do you got? You got copper, cobalt,
and
nickel, right? Yeah. So can you break those down for us?
Yeah. So our Smelter asset is underground.
Yeah.
It was mined for 30+ years. So, and there's still workings that are into our ore body we'd have a number of years easily before we'd have to do any extra work.
Yeah.
That's just about 30 million tons at 3.35% copper equivalent.
Right. Okay.
Yeah.
And how does that break down?
It's about 1.75% roughly, 1.75% copper, percent nickel. And the cobalt, we didn't actually include in the resource.
Right.
But we will because now we can recover it.
Okay.
And we can show that we can recover it.
Yeah.
We don't need a smelter to do that. So that is we don't process it as a smelter locally. So that will add tonnage. We've drilled significant amounts there as well. So again, we can go over that in a minute. Yeah. And then our Selkirk asset, it's over 200 million tons of mineralized horizon in the open pit.
Right.
But it's about 44 million tons right now. Okay. And the reason it's 44 million tons is it wasn't fully assayed for palladium and platinum. So when our team came in and Sean and the group came in, they said, let's reassay some of the core. And we only reassayed a very small amount. So with this last raise, we went out and we did a full comprehensive reassay campaign of all the core.
How many meters?
Like 30,000. It was crazy. Okay. Like a lot of meters.
Yeah.
They pinholed that resource. So when we do an MRE update in Q1, it will be in the M&I. It will be with hopefully the metallurgy completed, which we're doing right now.
Yeah.
We drilled 13 holes in it to do all this work. And we'll be showing something in a PEA phase on that into Q2.
Right.
So we can talk about what we're going to do to progress and how great 2026 is going to be. But those two assets on their own, Selibe is showing significant upside.
Yeah.
Every time we drill, we hit more. We have the borehole EM, which is electromagnetics that are associated to the mineralization, and for layman's, that's a treasure map. For if you're not and I'm not a geophysicist or a geologist, so I'm like, what does that mean? That means that the copper-nickel-cobalt is associated to electromagnetics, which means we can map it.
Right.
And we have. So every time we hit that, we hit
Mm-hmm.
copper-nickel-cobalt, and we vary in widths.
Okay, so you're factoring in on the good stuff quicker. Just in terms of the business model, right? Because you've fixed a bunch of problems, you've raised a bunch of money, sorted out balance sheets, you're attracting the right sorts of names now. They're going to want what are you promising them in terms of we're going to move into nearer term revenue or near term revenue soon. Can you explain away the kind of process in terms of study phases and economic studies, and how do you kind of expedite matters with 2 former producing assets?
Yeah, no, that's actually one of the questions I get a lot. What are you going to do? You just raised $80 million. How are you going to get this to an economic stage, right? So we looked at it 2 ways. Now that we solved the metallurgy at Salibe, our underground mine, we could do a study on what's there, and I imagine it will turn out very well, or we can show scale.
Okay,
Which
are you going Australian or are you going Canadian model? Okay, fine. We're going to show this thing can be big and make it someone else's problem? Is that the idea?
No, I think because we don't need a smelter anymore, the CapEx won't change much. It'll become a much longer life asset.
Are you those guys? Can you do that?
We have the team to do it.
Okay.
Absolutely. Like Boris Kamster, our COO, has built mines all over Africa. Sean's been involved in mine builds. I've been involved in mine builds all over the world.
Yeah.
We have an exploration team that can do it.
Right.
So I say the model's E to P or E to S. So exploration to production or exploration to sale, right? You either end up with one of the two.
Sure.
I never say I'm going to sell something until you get the right offer. Shareholders make that decision, not me.
Well, yeah, and you kind of undermine yourself in terms of the argument if you
Correct.
Say, yeah, okay. So when you're talking to the market at the moment, because we've seen about maybe 20 companies in the last 6 months who have said, look, the market wants revenue sooner, right?
Yep.
And before I would have been quite nervous about that model, but with the margins involved, there's room for error.
Yep.
But there's also a lot of greed around, and people are saying, well, show me the money, right? So you're not tempted by that at all, and no one's demanding that of you.
No, it's actually the opposite.
Right.
A lot of the investors came in and said, we want to see how big this thing gets.
Okay.
Like, you keep heading. Let's see the scale here. Because in these types of assets that are, I'll call them lower CapEx requirement, like if you're going to build our goal is to be sub 500 million per asset to build.
Right.
And generally when you get a copper nickel asset, they're very expensive to build because you need a smelter.
Okay.
Well, that's changed this whole dynamic of these assets. Again, the market is starting to realize that. A lot of the institutional funds that came in were like, whoa, okay, this is a different dynamic, different company now.
Yeah.
From an economics stage for 2026, we're going to have a PA on Selkirk. We're going to have a PA on Salibe.
Yeah.
We're going to show expansion at Salibe. We're going to show more metallurgy. Same with Selkirk. So we're going to have 2 economic studies in 2026.
Okay.
We're going to have all the expansion work. We're going to use this money to show, again, scale and size. Selkirk may even be a joint venture or a sale opportunity. Okay. That we could look to monetize that in a way that is non-dilutive to shareholders going forward. So that might be a future funding method.
Talk to me about jurisdictional risk. Botswana. Not a lot of people in North America understand or have been or know Botswana as a mining jurisdiction. Talk me through it.
Yeah, look, Botswana's safest, I'd consider it the safest jurisdiction in Africa. I lived in Ghana before for years, putting a mine into production there, and I liked it. It was safe too. Yeah. When I looked at coming back to Africa, there was many places I wouldn't go. Sure. Not to knock them, they're just personal risk jurisdictions. Yeah. Botswana is the longest standing democracy in all of Africa. 59 years they just celebrated. I'd say it's like Canada light with a better political system.
Don't go there.
It's a bad joke.
Yeah.
But it's very mining focused. I mean, it's been the diamond capital of the world for a long time, which, as diamonds are slowly going out of favor right now, there's
But in terms of big name miners, who's operating in the country?
You've got MMG, which is Khoemacau. You've got Sandfire there. You've got De Beers. You've got us. BHP's recently come in the country and started funding. You've seen exploration coming out of other major mining companies as well. So that whole Kalahari Copper Belt, where we are, is a pretty important area. And you're seeing kind of everyone go, oh, hold on. This is a safe jurisdiction. I can walk around at night. Like it's the most friendly people you'd ever meet. Very well trained and high skilled. So it's only 2.5 million people in the country. But what they do is they send their top people out to Canada to get engineering training, Europe. So you end up with very talented people that can run mines. Yeah. So 99.999% of our people in Botswana are Botswanan.
Yeah. No, the
We have
diaspora,
almost no expats.
the diaspora does come back, but also I think it's a fairly mobile market on that whole east coast in terms of like sharing. Well, so attracting the right sorts of people,
Yeah.
for sure. Okay. Well, let's talk about actually what 2026 is actually going to deliver. Because execution is the name of the game here. If you're going to demonstrate scale, you maybe I think a slightly different pace, slightly different pressure from if you're trying to show revenue sooner rather than later. So you got to do things. You want to do things the right way. So what does that look like for you?
Look, we'll kind of go back to that revenue model. With our Slibe asset, if you were to go and put it into production too early, you could potentially sterilize a portion of it, right? You could say, okay, well, we're gonna take from Slibe North and only a little bit from Slibe Main, and we're gonna get revenue from it. That's in a very unoptimized state. You want to show 15 to 20 years at an optimized throughput. It's only going to take us this year to show that. Like that's
why did they start where they started then? What
do you mean?
The previous? Well, these are two former producing.
Yeah,
mines,
Slibe North,
right?
Slibe Main.
Right. So they started those. Was it a much smaller company that was trying to do this way back when?
No, BCL was operating both of them.
Right. Okay.
Yeah. So they didn't really drill too far ahead of themselves. So they had about 2 years of resource ahead of them. So they weren't.
So it's a different model.
Very different model, different metallurgy, different processing.
Right. You've got a different thought process.
Different thought process. They didn't use modern technology. They didn't use the geophysics that we use. Right. And that if you look on our presentation, you'll see a bunch of yellow boxes like someone pencil crayon them in. I promise you it wasn't a geologist. That is a very geology thing to do. But that is, every time we hit one of those, we just find more. So I don't anticipate that's going to change going forward. The only thing about being in Africa right now is the assays are incredibly slow.
Yeah.
So we're working with the labs to try to increase that. But
where do you send it to?
With South Africa, ALS South Africa. And there's a lot going on there right now. So we did a big reassay program on Selkirk too. So we sent a lot of core to them. Yeah. So they're chewing through it right now. Yeah,
no, I've seen that a lot. That a lot. That's why I was asking about in terms of doing business in country. I think people's one thing, but the resource and facilities is another, right?
Yep.
In terms of that investment back into country, and who the heck's going to do that?
Absolutely.
We shall see. In terms of the people side of things with regards to the board, it looks like a massive board. Is everyone actually do stuff there, or is that like we call on you when we need you situation? Because some big names, but there's a lot of names.
So we've augmented the board significantly
Okay.
since I came in.
Yeah.
Brought on, I'd say 3 really key new members.
Okay.
Chris Levy, which is former CIO of BlackRock's U.S. Equities. He was former CIO of Oppenheimer Fund. Like he's a Wall Street name. Chris is very involved.
Yeah.
Not just a name. Like very highly intelligent. Wanted to learn more, so we went and took like metallurgy courses and like mine economic courses. I'm like, I'm pretty sure he knows more than me about mine economics now. I've been doing this a long time. We brought in Philippa Varis. Philippa lives in London here, actually. Probably top 2 or 3 ESG people on the planet for mining.
Yeah.
Top 5 female in the world mining. Like just very involved. Took her 4 months of doing DD to even want to get involved. I've known Philippa for a very long time, and she, had all the calls, talked to all the people, like wanted to make sure this was sustainable, doing the community relations correctly. Yeah. Brought in Andre van der Kerk, former CFO of Gatos, which just sold for 1.2 billion.
Yeah.
When I say E to P and E to S, exploration of production and to either sale, our team has done that holistically. Okay. And we have a very involved board. So when we do want to, and I mean that in a positive way, it can be negative sometimes, but they all add significant value in different parts of the pie chart, right? Jim Gowan's being a mine builder, Canadian and Botswanan, right? Paul Martin, our chairman, is former CEO of Detour. That was a huge mine, right? Mark Christensen, back in the GMP days, like Mark raised an insane amount of money for mining companies back in the day, and even Jason's just again another CFO type that's been through everything through production and through sales. So you do have a large board, but you have a board with every facet you want from E to P or E to S. Okay,
so to demonstrate the scale, you've got a board of big names with big company mentality, and you're setting yourself up to
Not
chase scale.
Not necessarily though.
You don't think so?
No, I mean like Philippa and Andre were at Golden Star before, so that was a smaller smaller company that
Yeah.
morphed into something bigger. Andre just did Gatos with Dale, so they took it from 200 million to 1.2 billion buyout in 2 years. So I'd actually say it's more that kind of niche from 200 to 2 billion range.
Okay.
We've worked for majors, like I've worked for majors, and Sean Whiteford's worked for majors, but the board is nimble and understands you need to be nimble.
Okay, so let's look at 200 to 1.2 billion.
Yeah.
For argument's sake. To do that, you're saying you need to demonstrate scale. What else do you need to demonstrate to be able to do that in a 2-year time frame?
Economics.
Right. It's as simple as that.
Yeah, scale and economics. I mean,
But
it's,
that game you took in the game of like sell, E to S.
yeah, or
Right,
E to
that's-
P.
or
They'll
E to P.
actually they'll happen probably right at the same time. You'll
Okay.
either make a production decision or you show enough scale that someone comes in and goes, we see this now, we know
Yeah.
where it's going, you've solved all the problems, you've deleveraged the company.
Who's
Thank
buying
you.
copper at the moment?
Everyone.
Good one. Who?
Tech's investing in different areas of the world. BHP's hard looking for copper. Anglo buying tech is a big vote for copper. Kamoa Kakula with Robert Friedland. He's, again, talks about copper being the biggest thing that you need right now.
Always.
24/7.
Yeah. Yeah.
Log into my
we
Twitter
get
and
it.
it's Friedland.
We get it, Robert.
Yeah. No, he's
Yeah.
he's a great
Yeah.
voice for the industry.
Yeah, no,
absolutely.
I get it, but not everything's kind of getting over the line, right? So I think there's a lot
It's
of
difficult.
in the junior space. There's a lot of companies talking a good game, low grade. Put in a beep here. Words low grade crap. Okay.
Yeah.
And it's the same old story every single time. To find meaningful copper projects which can move through the development phases quickly, demonstrate the scale, and hopefully have the grade and be attractive to some of the big names who have lots of other things on their plates and lots of optionality in front of them to stand out. Do you think this has got what it takes, and what are the things that you specifically need to hone in on to make damn sure it does?
It was one of the reasons we got involved in this. Was it has what it takes. It's past produced. It's been de-risked significantly from that. A lot of these mines, I've been involved in mine builds. Like you're like scratching your head, like, okay, that mining method isn't working. What are we doing?
Yeah.
Whereas this has been tried, tested, and true, right? There were certain steps we had to take to fix, or I don't even say fix, but to augment what had been done in the 60s and 70s to modern technology, which is the metallurgy, which is scaling the asset. So do I think it has? I think it has absolutely every right to be something at a mid-tier major, upper mid-tier, lower major. I'm not going to say, it's a 600,000 ton per annum producer, because that'd be a full lie.
Yeah.
The fact is, you have a mine that has mining permits in place, that is past producing, that we are now showing scales, and we've solved the questions that most people have had. That's upside to me.
Mm-hmm.
But like any project in the world, you can have a great project, but if your balance sheet and your capital structure is a disaster, then you'll kill the project.
Yeah, from the start.
And so that was as much pain as it was to go through this process, because it is painful.
Yeah.
We put money in, everyone invests.
Okay.
We did all the things we said we were going to do, and we had this payment we had to make. Now, from there, everything we do, there's no overhang. There's no one coming to me going, yeah, but we'd love to invest now, but you still got to pay 25 million.
But what are the big ticket things that you need to do to get from E to S, for instance, right? Because demonstrate scale. So that suggests raise a ton more money, do a ton more drilling, and show scale that way. And how does that kind of phase in? And because ultimately the question I'm trying to answer, what the heck am I investing into here? Is this a slow accretive growth, but growth nevertheless? Or with a lot of retail looking for a quick win, a quick turnaround? It doesn't feel like that.
I think it's actually more of that.
You think it's good? There's some quick inflection point, guys, pile in now.
Huge
Right.
inflection points.
Okay.
I'm a big believer in compressing time value of money.
Okay.
And I know if you look at our share price right now, you're going, do you believe that? You do, because of the amount of work we've done in such a short time, the amount of things we've solved in such a short amount of time, the amount of things we're going to get done in 2026. We're fully funded to do it. We are going to show scale. We are going to show economics. We are going to solve any other issues that come up. But that was the point of this.
Yeah.
We're not coming back to you.
Yeah.
We're going to show potentially EDS. We're going to show potentially a path to production. And the next time you tap the market isn't to be like, oh, well, maybe it's going to work. It's here it is.
So what's that 80 million net off of after you paid everything else?
55.
Down?
Total.
55 to play
We
with.
have 90 in the bank right now.
You got 90 in the bag.
Yeah.
Okay, right, fine. you get 90 in the bank. We don't need to come back to you anytime soon. That's the message to retail.
Yep.
And I'm sure the institutional boys and girls get that as well.
It was actually a really big part of the institutional
So
raise.
take it when it's there.
Take it when it's there. And as much as, again, it's painful,
Yeah.
if you look at the market now compared to when we launched this raise and then closed it,
Yeah.
wouldn't have been able to raise that now. Every fund's like, nope, taps off,
Yep.
risk is turning off in all the sectors.
Yep.
You know, you're seeing some raises get done in the gold space still, but in the kind of mid-tier, smaller cap copper space, like we raised almost half our market cap.
Yeah.
Or we raised almost a full market cap. Like we knew we had to raise it. To raise $80 million is not easy, right? You can raise 5 or 10. You know,
I say like a third of your market cap was something we would give you comfortably. Anything more than that, you need to be extraordinary.
yeah. Well, I think the team did a great job, and to attract people like Condire and to get,
Yeah.
you know, EdgePoint, who's been funding this for so long. Jeff and them are fantastic people, and I phoned him and I'm like, hey, you know, we're doing this raise. You don't have to participate or anything. He's like, well, wait, what do you mean we don't have to participate? I'm like, we're good. We got it.
Yeah.
He's like, no, we're participating.
Yeah. Yeah.
I'm like, okay, different dynamic, right?
Yeah.
I mean, we're probably 75% institutional now. When I started, we were 30, right? So there is a sector rotation that's happening, and the next inflection point changes the stock dynamic generally.
Mhm.
But again, it's all execution based now. So we've taken the risk of needing capital, we've taken the risk of the market out of it from a when you're going to raise standpoint. Yes, again, painful. Not negating that. I'm in at like $8.
Yeah.
Like I understand, but it would be way worse if you tried to raise in a horrible market, couldn't get the money and couldn't pay that payment.
Yeah.
Then you'd be sitting in a place where we lost the asset and I would be getting sued.
Different set of challenges
Yeah.
at different times.
Different
Well,
times.
timing's everything. Appreciate you coming
Thanks.
and seeing us.
Appreciate it.
Genuinely.
Yeah.
Great story on the surface. I want to dig down more. Come and
Good.
see us. Please stay in touch.
Anytime. Thanks.
Okay.
Appreciate it.
Brilliant.